All right, guys. My name is Pete Vanderveen, and I'm the Chief Revenue Officer for Agora. And I've got several of my teammates on here. We got Matt, who's our CTO. We got Brian, that's our Chief Underwriting Officer. We got Corey, that's heading up our capital raising and lead generation. And so these are good, God-fearing men that just are really passionate about our goal here to really create a movement, not just an investment opportunity that is people, profit, and purpose. And what we're trying to do is really create a new defined version of what private capital should look like. So first off, where did we come up with the name? Agora is actually an ancient gathering place where citizens and elected officials congregated to vote, conduct state affairs, and really discuss philosophy. So a lot of the Stoics that we know of, Socrates, all of them, the visionaries that actually spoke into the future that we see today. That's where a lot of them worked, gathered, and made decisions. And today we get to live with a lot of the benefits and the visions and the foresight that they had. So with Agora, our goal is to do that same thing for the financial markets. We're building something that's special. We're creating something that we hope has generational impact. So I want to give you guys a little bit of background. For us, we're passionate about private credit, and really private credit directed at the American small business. And just to understand the scope and the importance of American small businesses, I want to give you some statistics that 99.9% of American businesses are small middle market to small or low market to middle market companies. 55% of new job creation is small business. Almost half of our GDP is small business, and 39% of private payroll is small business. So if you actually look in the big picture, if it weren't for small businesses, the American economy would be a fraction of what it is. And that's why it's so important for us to keep them strong and thriving and invest into them. And that's what we're seeking to do with our investors' help. Now, the problem that we're trying to solve is that even though small businesses are super important, what's happening is small businesses are being left behind. And most people don't realize it, but the majority of American banks, your corner banks, your Wells Fargos, your USA banks, your Harris banks, these banks, very small, like less than single digit percentage of their portfolio actually goes towards business finance. And here statistics show that 38% of potential borrowers don't even bother to go to banks anymore because it's so hard. 60% of big banks lending, or there's been a 60% drop in big bank lending. And that was already from a single digit percentage. And now it's dropped 60%. And 82% of small business failures is a result of inaccessibility to capital, basically being capital constrained, and they can't grow, they can't scale, they can't take or partake in opportunities, and therefore they're stuck. So we see that as a huge problem that we're here to solve. And then that pain point leads to the outcome that we do not want to see in the marketplace, which is when capital goes wrong, everybody loses that we want to support and that we want to empower. So when capital goes wrong, the old way is that the one side of the scenario has all the power, meaning the banks, the people that are deploying capital. In a traditional finance model, the bank has all the leverage and the borrower is victim to whatever their terms and conditions are. That comes with rigid structures. That comes with transactional relationships, meaning you're only worth what your benefit is to that bank. Otherwise, you're worthless. They don't have time for you. They don't want to deal with you. They're not there to support you. And all the risk is on the borrower. And that comes with a model where actually they're inducing failure because they're putting so many rigid constraints on you that you don't have enough capital. The capital that you do have comes with all these strings attached. And then if you ever end up offside, they're going to sue you and you're going to end up in claims court. So traditional finance is hostile. And the Agora way is really to reverse that script. We're trying to find people, investors, and borrowers that have aligned interests. We're trying to create an economy, an ecosystem that supports people so there's a win-win, not a win-lose. We're trying to create flexible solutions. We're trying to create collaborative relationships so that we're here to help others win. We're here to empower these businesses, and we want shared growth, meaning the business can thrive while the investor can make great returns, and we can all do well together. Whereas in a traditional environment, the bank is the only one that wants to win, and they're not really interested in the success of the borrowers. So our capital is designed with leadership, guidance, and support. So in a traditional model, you go to the bank. If you're lucky, you're going to get a loan, and if you're lucky, you're going to get a decent loan to value cost, or a decent loan to value amount. But what's not going to happen is they're not going to support you. They don't really know how to run a business, and they're going to approach you with all types of hostility. In our model, we know that if we can deploy capital and if we can provide leadership and support and guidance, we could actually ask the question, imagine the outcome. Imagine the possibilities if we could give good people capital with good leadership, good support, and guidance. Imagine what the outcome could be. And that's what we are trying to bring to the marketplace, is this type of environment where we empower through deployment of capital. And we believe, as part of our fundamentals, that good capital should strengthen four things. We want to not seek to rescue companies that are in distress. We seek to deploy capital to healthy companies, and healthy companies are founded and oftentimes operated by families. So if we make a business successful, we can impact positively those lives, those marriages. Those marriages and lives transcend into a community. We can make a community successful. And then ultimately, we can impact culture. And we're talking about making America great. The way we make America great is we invest into businesses, and these businesses will have a positive snowball effect to continue to spiral positive outcomes through the community. Now, what we believe in is we want capital to be more than just an ROI. It's more than a KPI. It's more than just a number. We want to deploy capital with impact. And our impact is ultimately to create a catalyst to help good businesses grow that traditional finance is not giving them access to achieve. And ultimately, we're here to have partners that want to deploy their capital not only for good returns, but they also want to see an impact, and a significant impact at that. And that's what we're here to build, and we're here to build it with you. So ultimately, we're not just building a network. We're not also just building a portfolio. What we're trying to do is build an entire network. We're trying to build a movement where we bring in borrowers, we bring in investors, and we bring in an ecosystem of support where everybody is winning when it all comes down to it. So ultimately, we're finding strong businesses owned by strong families who want to do good in their community. And once again, our capital comes with leadership, guidance, and collaborative environments. So our model is different than traditional finance, and we believe it's far superior because of a lot of things. One is our capital comes with trust, alignment, stewardship, and these aren't just buzzwords or empty values. They're competitive advantages. So if you go into the traditional marketplace, the bank doesn't trust you, doesn't like you, really doesn't want to invest into you. It's rigid, it's transactional, and it creates incredible amounts of friction. We know that our model creates accessible capital. And once again, we are aligned. The investor, us as the sponsor, and the borrower are all aligned because we want to see good outcomes. And we know that good outcomes really starts with a good input. And once again, if we are aligned and we're stewardship focused, then we can create the outcomes that we want. And once again, we're bringing order to a model that has historically been filled with chaos. And once again, we know the good businesses. We all know good businesses. We know friends, family, coworkers, acquaintances that are running good businesses. These are great people. These are the heart of the American economy, and they have great values. And when we invest into those people, it becomes a growth incubator. We can accelerate their growth. We can accelerate their business. We can accelerate their cash flow. And then the spiral, or the compounding effect of that good opportunity with good people, with good money, creates incredibly good outcomes. And that's what we're here to do. And of course, like I said before, we're here to create a model where everybody wins. When a businesses thrive, or when a small business thrives, then everybody wins. Investors receive great returns. Businesses get the capital they need. They can partake in the opportunities that are there. They can grow the way they want. They can They can capitalize on contracts that are available. They can achieve the blue sky that they're seeking. And once again, when those companies are thriving and growth is able to occur, communities are creating jobs, they're creating opportunity, they're creating affluence, and the economy grows stronger as a result. So how our model works is we find, we fund, we fuel. So this is a repeatable framework that is really focused on deploying capital. So step one is we find good operators. And this means in a traditional finance model, the bank doesn't care who you are. They don't care what your background is. They don't get to know you at all. They're just looking at straight underwriting and they're looking at straight financials. For us, we flip the script because we understand investing into the right people changes everything. So in order to invest in the right people, we have to get to know who these operators are, who these owners are, and put an incredible amount of weight into the relationship capital that exists there. So we put due diligence towards the people. And when we find the right operator, then we fund that operator through a mutually beneficial structure that creates growth, that creates leadership, that creates incubation. And then ultimately, we're fueling positive outcomes. We're fueling the growth that they saw potential. They saw the blue sky, and we're helping them fuel that and step into that. We're also fueling the outcomes for the investors because they know that capital is deployed in the right way into the right people. This isn't a blind pool. And then ultimately, we know that the compounding effect is now this community has an exponential factor on the community, on the nonprofits that they serve at, the churches they attend, the churches their kids go to. Everything has a compounding effect. And once again, I said the operator matters most. You go to a traditional finance model, they're not putting any effort to get to know you and to build a relationship with you. You are a number, you are a transaction, and that's it. In our case, that operator matters most to us because we need to get to know him, we need to trust him, we need to believe in him, and then we're going to invest into him. And ultimately, it matters who's running the business, what's their track record. Do they have financial track record of success, or do they have a history of financial underperformance? We want to understand their decision-making abilities. We understand their personality, their character, what their values are. And ultimately, we believe the operator is the first thing we should evaluate, not the underwriting and not the financials. Then following that, once we know we have the right operator, once we know we're not dealing with a distressed individual, once we know we're not dealing with somebody that has a history of failure or a history of potentially nefarious actions, then we create a holistic and an equitable structure that creates safety. And once again, we're looking for asset-backed opportunities. We want investments that have significant cash flow, have high debt service coverage ratio, have great, strong fundamentals. And then we also want to make sure that the business has cash flow or has significant assets to make this investment sound and a great opportunity for the investors. Then we create a loan participation note, so we lend money in a way that provides structure, clarity, and transparency, meaning we give the investors complete transparency and see-through to the opportunity. They get to see the leader, they get to see the background checks, they get to see who this person is, they get to see a portfolio on this company, they get to know who they are in terms of community leaders, philanthropic partners, and just good stewards in that community. That is incredible insight versus traditional finance or traditional private credit. You're putting money into blind pools that go to shadow banks that deploy things, and you don't know where it is. All you see is a return on investment. And lastly, we want to participate with our investors. We want our investors to participate feeling like they're part of something much bigger than a traditional investment model. And then the big thing that we do that's different and unique as well is after the wire is completed, this is not a set it and forget it. So once again, traditional finance, you get the wire and you don't hear back from them ever until you're in default. And when you are in default, it becomes really hostile really quickly. In this case, we are there every step of the way after the wire. So we don't just deploy and walk away. We deploy, and that's the start of the relationship. That's the start of the partnership. And at this point, we are 100% engaged when it comes to reporting, governance, communication, and support. And this is powerful when things are good, but it's even more powerful when the economy makes a turn and things become more challenging. In traditional finance, the bank doesn't help you until it's too late, and then they attack you. In our model, we're there to help you grow. And when things get difficult, we're going to help you navigate those uncharted waters, and we're going to make sure that you're still successful. And once again, when we have a good leader with a company with good fundamentals, even if the cash ratio gets slightly worse, we still have ample cushion there to make sure that the investor is paid as was discussed to begin with. And once again, we stay close, we create value, and we don't stop just because the wires trans has completed. We're there through thick and thin. And then the ecosystem. Agora is the central hub to our Keiretsu or our ecosystem. And we operate in a way where Agora is a central capital sourcing tool for this model. And our partnership has a long, extensive track record of doing some pretty incredible things. We have hundreds of years of experience as business leaders and financial expertise across our team of directors and executives. And then we have companies like BBE, Luminosity, and Cypnios that all have extensive track records acquiring real estate portfolios, operating in the private equity leadership space, and in the acquisition space of small businesses. So the wealth of information, the wealth of knowledge here is exhaustive. But once again, it all adds credibility and all provides stability that nobody's doing this alone. We do this together, and we ensure the investors taken care of. We make sure that the borrower is taken care of, and we ourselves understand we are a hybrid between an incubator and an accelerator. So once again, when private credit is done right, it's incredible. We've seen the marketplace. Private credit is becoming more and more important because traditional financing is becoming more and more unavailable. What we've also seen is private credit in recent history has been improperly deployed. Your big asset managers have treated credit as a sale model, meaning they could try to sell it as many times and to as many people, and then create portfolios they can sell to secondary markets. When you deploy money blindly to anybody that needs to borrow money, oftentimes you end up in situations where the return on investment is not there because you didn't actually vet the people properly. It's subprime market 2.0. And we at Agora are convinced that when we do it our way, which is sourcing the proper people, investing heavily into the relationships, we're not going to see some of the downsides that your traditional big asset managers are seeing in their private credit portfolios. But once again, we do see the market growing exponentially. As you can see here, since 2000, we've grown to a $3.5 trillion private credit industry in terms of a market cap. And therefore, the need is there, the demand is there, and we want to supply it in a holistic way. So the way our loan participation notes work is Agora sources the capital through our heavily vetted model. And then we create loan participation notes that are secure, transparent, and diversified. We deploy them with your help. And then we invest them into asset-backed or high cash flow models with high growth opportunities. And a lot of our businesses are either real estate or they're businesses that are likely to not be impacted by AI or some of the things that are disruptive that are coming down the pipeline. So your return in context is really this tiered model, but we offer our investors a 12% preferred return. So meaning you're going to be getting monthly cash flow from your investment with a balloon payment at the end. A lot of our terms are short duration, so we span anywhere from 1 year to 3-year holds. So we're talking limited lockup. You're not contingent upon an exit or a sale of a property or the marketability of a property. Your money is assured, it's committed to you. And once again, we're talking visibility, so you get to see the fuel into the deal. There's extensive structure, holistic, mutually beneficial structure. So you get to see how we fund it. And then ultimately, we're looking to find the operators that you can trust in, we can trust in, and ultimately we can create incredible outcomes together. So I think what most of us feel to our core is that we're creating the best outcome possible. Obviously, the marketplace wants strong returns. There's the other side of the industry where people are seeking impact investing. And we know that if we can bring them together, there's a sweet spot where we can create the best of both worlds rather than picking one or the other. So our model is really built to last. We've wanted this to become a flywheel, or our vision is for this to be a flywheel, which means we have to have continual success and we have to have continual returns. And our model is scalable. We build a strong foundation with strong investment principles and fundamentals. And then we see the growth, we see the scale, and ultimately we create the legacy we want, which is making American small businesses successful, impacting the communities that they serve, and making sure that we fuel the economy for the future and for our kids. So the people we're really looking for are investors that want good returns, investors that appreciate and respect how much effort we're putting into to vet the deal for you, people that want transparency, that they do not want a blind pool, people that are entrepreneurial and collaborative in nature, people that want to participate in the investment opportunity, and people that really want to make an impact in this economy, in this country, in this nation, and in their communities to fuel the heartbeat of America. And I think if that's who you are and you feel like integrity, relationships, and faith-based principles are important to you, then you're a perfect fit for us to take this thing to the next level. We're excited to learn more about you and see how you can participate. If you guys have any questions, please scan this QR code again. This will take you to a booking calendar to jump on a call with one of our sales team. If you know anybody that might be interested, please share this, and hope to speak to you soon. Appreciate everybody.